The entire crypto market is growing and becoming much larger at a much faster pace than we ever imagined possible. And this is actually very exciting to see. But we also focus on the big target, which is the greatest wealth transfer in history. This has been a term, this has been, something that people have been hearing about for years now. In fact, a lot of YouTubers have promised us the world when it comes to the great wealth transfer. But the problem is that they actually never break it down. They don't actually tell you what the great wealth transfer actually is. And in this video, I really want to share with you guys what's really going on here when it comes to the greatest wealth transfer in history. So welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So let's dive on in and let's start off with this post here from the co-founder of EZA. And we have here that this headline is even bigger than most realize, because we just saw, fun fact, less than 7% of the global population is invested in crypto. 93% is still out there trying to even learn about crypto. Maybe they don't even know about crypto. And it's kind of crazy if you think about it. Less than 7% after how many big headline articles, after all of the big players jumped in. It's still crazy that 93% are still on the sidelines. For every 1% increase, $40 billion of new liquidity flows into crypto. Here's the math if you want to get technical. 560 million people hold crypto today. 560 divided by 7 equals 80 million people per 1%. If each new holder holds $500 worth, that is $40 billion of new liquidity per 1%. As crypto adoption increases, this number will increase exponentially. So the actual number is likely magnitudes bigger. We're earlier than nearly anyone realizes. Now, the thing here that I want to highlight is how many can we confirm, right? Like how many can we actually confirm hold crypto? Because we can just go off of, for example, wallets. But the problem with wallets is, let me ask you all this, how many wallets do you have? I mean, just off the top of my mind, if we're just going off of like hot wallets, I have probably like 5 or 10 different wallets. Cold storage devices, 3, 4. So if we're thinking about this, like how many of those holders are actual holders of crypto, or how many of it is duplicate, wallets, or we don't know the actual number here. That's the number one thing that I want to really kind of put a spotlight on. So if we're only at about 7% of the global population, what's the real percentage here? It could be even less, which is why, yes, we are still extremely early. But let's go over here as well. So if we are at, let's just say that we are at 7%, right? Where's the next 7% going to come from? Well, here we have from Frank Shapiro, 2025 is the year our multi-trillion-dollar capital markets plug into Bitcoin and crypto markets. It's happening. Buckle up. And, this is something that I have been really kind of paying attention to when it comes to, for example, like Ondo, right? Ondo, Axeler, a lot of these big players are actually becoming the welcome mat for traditional finance, for the big players like Wall Street to jump in. Here we have Wall Street banks plot their crypto future and bet on IPO boom. Morgan Stanley is courting clients. RBC weighs more business. Trump's crypto-friendly regime is expected to unleash deals. Over here, we have Morgan Stanley CEO Ted Pick says banks will work with U.S. regulators on offering crypto. Also over here, we have from BNY to Citi, Wall Street moves in on crypto. And even Bank of America has, really said, like they already told us, yeah, we want to utilize crypto for payments. We want to tap in to crypto in a big way. So they're already here. They are going to be the ones that open the floodgates to the next 7, 14, 21+% of investors. Now, on top of this, let's go over here to what Ripple recently posted. Fintechs have a $20 trillion opportunity in crypto custody. 96% of institutions see crypto as a key for attracting new customers. Secure and compliant custody is a must-have for fintechs offering crypto and tokenization services. Fintechs can meet both institutional and retail demand. Again, the next big wave here is tokenization. And you know what's funny about this? How much money is out there that will be transferred? We're going to talk about that. Let's go over here. Unlocking new fintech revenue streams with digital asset custody. So within this, we see the breakdown of the 10% of global assets forecasted to be digital by 2030. They'll be on chain. But the big thing here is institutional digital asset custody, right? Like that's the next big wave for a lot of these fintechs. Now, Ripple has been at the forefront of this for a while. But if we scroll down, we can see that this surge in interest is driving the $20 trillion opportunity and making institutional crypto custody a priority strategic investment for fintechs. Unlike less agile traditional providers, fintechs can move swiftly and decisively to meet market demand for institutional crypto custody infrastructure. First movers are eager to leverage flexible, secure storage and management options, including multi-party computation and or hardware security models for private key management that address heightened compliance and security requirements for a broad range of digital assets. Now, again, the main thing to take away from this article from Ripple is just how we are witnessing the shift from the institutional side. Right now, we know all of the big banks are preparing for crypto. They want to offer crypto to their clients. They already see that, crypto is going to be a key for attracting new customers. 96%, by the way. Like, this is not some small figure. Like, this is 96% of institutions. When we think about what's happening here, right, they are going to drive the next wave. But the bigger question here is, where's the wealth transfer coming from? Well, we know that, and this goes back to October 11th of last year, we know that millennials are picking crypto over other assets as $84 trillion in wealth transfer looms. Younger investors are expected to focus their investment on crypto. There's an $84 trillion passing from older generations to younger generations over the next decade. So within the next decade, $84 trillion will be transferred. We could see $84 trillion flood on chain. Why will this happen though? Is it because I'm speculating? No, it's because of what we are seeing happening around crypto already. All of the big institutions are lining up. Wall Street is lining up. BlackRock is telling you that they want to tokenize stocks and bonds immediately. They want it now. They've been demanding the SEC to approve this. At the same exact time that Ondo Finance is pushing the Wall Street 2.0 narrative. We are at a defining moment in global finance, and that the convergence of traditional services and blockchain technology holds the potential for a fundamental upgrade to our financial system. Welcome to Wall Street 2.0.
We're at a defining moment in global finance. The convergence of traditional financial services and blockchain technology holds the potential for a fundamental upgrade to our financial system, one that will make markets more transparent, more efficient, and more accessible for everyone. While many of you in this room and those joining virtually have been working towards this vision for years, we believe now is the time to begin working more closely together to make this vision a reality.
And remember that Ondo is working with some of the biggest players on Wall Street already to make this a reality. I mean, listen, Wall Street itself will be tokenized. Stocks will be tokenized in a large way. They're already starting to be tokenized. So when we go over here to this post from Altcoin Daily, this is actually from Raoul Paul, Michael Howell, crypto is the greatest wealth transfer since the 1920s. Check this out.
And I think the analogy, maybe I've used it before, one can extend it dangerously. But if you go back to the 1920s in Germany, where you saw hyperinflation, the question was, how did people react to that? Now, what you saw in the 1920s Germany, well, the older generations basically buying what they'd always bought, which were bonds, because that was always a safe asset. That's what they've been told. But their wealth got wiped out. Their younger generations were buying equities. They were told by their peers, you're idiots, okay, don't buy equities. They're fragile, okay, but equities went up dramatically in price because they were inflation hedges. So there was this whopping great wealth transfer in Germany in the 1920s for the old generations to the young generations. Now, obviously, there were political consequences. Well, let's not go into that. But the wealth transfer was very, very significant. Now, if you look at what's happening now, I think you're getting a parallel because you're getting a monetary inflation. Okay, we're not having a hyperinflation. We're getting a monetary inflation. The older generations are saying, well, what you're going to do, you just buy value stocks, okay? This is what we've always done. That's what's going to make you money, okay? And the younger generations are saying, well, I don't understand that. We're going to buy crypto or whatever it may be, or tech, because we understand that. The older generations are saying, you're mad, and then, once children turns around and say, well, okay, well, I bought Bitcoin at $200, good luck there. This is where you get the wealth transfer.
So, yeah, I mean, listen, when we think about what's happening right now, we're already starting to see that big wealth transfer emerging in a huge way. I mean, you now have a presidential admin talking about crypto in a large way. I mean, you have presidents launching meme coins, promoting meme coins. I mean, this next evolution is going to be a regulated environment where the institutions are in charge, essentially, in a huge way. And when I say that, no, I don't think that they will control these assets. I think that they're in charge of, certain protocols or solutions that they're pushing onto their clients that are launched on these networks, making these networks extremely valuable. I mean, when we think about us, and I mean you guys watching, including myself, we're visionaries. We're seeing this before the next 7% or the next 70%. The great wealth transfer is happening. We can see how much money is out there that will be, distributed over the next couple of years. I mean, it's kind of crazy, but, over $80 trillion is going to be transferred in the next 10 years at the same exact time that 10% of the global assets, 10% of global assets will be on chain by 2030. So where do you think the next big wave of capital is going to come from? It's going to come from, the big banks, but also these younger investors realizing how big this space will actually become. We're sitting at $3 trillion. This space is headed much higher, especially if we think about how significant this tech is, how efficient this tech is, and how big this tech will become, especially in the hands of, TradFi enterprises, the big players to actually adopt it. I feel like it's so obvious. Maybe I'm just looking at it in a different way. But when we think about Swift, the DTCC, the big banks, all of these massive giants saying like, listen, this is it. And they're already here tokenizing or working with DLT in some sort of way. I mean, BlackRock is literally tokenizing. They already tokenized a money market fund. All right. The DTCC is launching digital ledger or distributed ledger technology assets, utilizing digital assets. Their actual solutions are leveraging this tech. Swift is innovating to, promote tokenization. When we think about this, this isn't some sort of speculative narrative. This isn't some made up idea. It's happening now. So when we think about where is the best place to actually invest money, I don't think it's stocks anymore. I don't think that that's where the next, wealth transfer will happen. It's going to be in an asset class that has less than $5 trillion. I mean, $5 trillion is just a starting point. We're at $3 trillion right now. Think about how much more potential this space actually has left in it. So with that being said, I hope you guys enjoyed this video. If you guys definitely leave a like, subscribe, notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.